Today, I will explore the advantages of long-term investment in the Vanguard Utilities ETF, commonly known as VPU. This video will delve into why VPU, a fund invested in essential utility stocks like electricity, water, and natural gas, represents a robust option for long-term investors. 1. VPU is an ETF composed of 65 U.S. utility sector stocks. 2. It has shown good performance with stable price movements and high dividends. 3. It has a track record of steady growth in the past, and further growth is expected going forward. VPU aims to track the performance of the MSCI USA Investable Market Utilities Index. It holds U.S. electric and gas utility stocks of all market capitalization sizes. So, VPU is an ETF that provides exposure to a diversified portfolio of leading U.S. public utility companies, with the goal of delivering the returns of the overall utility sector. Ratio is 0.10%. Sector ETFs focus their investments on the stocks of a specific industry or sector. By investing solely in the stocks of a particular sector, these ETFs aim to deliver investment returns that track the performance of an index representing the overall trends of that industry. In other words, sector ETFs provide targeted exposure to a specific business sector, allowing investors to gain exposure to the price movements of that sector as a whole. VPU is composed of stocks from the U.S. utility sector, and the breakdown of the various industries is as shown on the screen. It is clear that the electricity industry accounts for a very large 60% of the portfolio. Next, let's introduce the top 10 holdings in VPU. Half of the companies have energy in their names. Although the fund invests in 65 stocks, the major holdings are dominated by large cap companies. The top 10 holdings account for 54.26% of the entire portfolio. Let's introduce the top 3. NextEra Energy is the largest renewable energy provider in the United States, supplying power across the country. Its subsidiary Florida Power and Light, focused on natural gas-based electricity generation, accounts for around 70% of the company's revenue. The earnings are then reinvested by the NextEra Energy and Resources subsidiary into renewable energy projects, particularly wind and solar. The company is currently involved in the development of Sun City, also known as Babcock Ranch. Duke Energy has been operating one of the largest utility businesses across the United States since the early 1900s. In the 2021 fiscal year, it reported higher revenue and profits than even NextEra Energy and Southern. Around 90% of its revenue comes from the electricity business, while it also has operations in natural gas and renewable energy. The company has been led by CEO Lynn Good, who was named one of the world's most powerful women 2021, since 2013. In 2016, Duke Energy acquired Piedmont Natural Gas to expand into the gas business as well. Furthermore, the company has successfully reduced its carbon dioxide emissions by 31% since 2005, and aims to achieve net zero emissions by 2050. Southern Company is a holding company that owns electric utility companies and natural gas distribution companies across the United States. Its energy mix consists of around 50% natural gas, 20% coal, and approximately 15% each from nuclear power and renewable energy sources. The company is currently focusing efforts on constructing nuclear power generation units. In 2018, it sold a portion of its utility business to NextEra Energy to fund its nuclear power projects. It has announced that it will be able to produce more than half of the clean energy generated nationwide, operating 24/7 across the country. I would like to look at the chart for VPU. It has been continuing an upward trend since the set year of 2004. Although there were declines during periods like the Lehman shock and the coronavirus pandemic, taking a long-term view, it has been increasing in a stable upward trend. The government has been making efforts to build large-scale semiconductor factories in the country recently. When these semiconductor factories begin operations, they will require tremendous amounts of energy. Furthermore, as the number of factory workers increases, their energy consumption will also rise significantly. In addition, The rapid development of AI has led many companies to scale up and use more servers and GPUs, which will also require substantial amounts of power. Therefore, today we will explore ETFs that provide investment opportunities to capitalize on this increasing energy demand. Next, VPU is comprised of companies operating essential infrastructure businesses such as electricity, water, and natural gas. These are so-called defensive stocks, which are resilient during economic downturns and are characterized by high dividends. Moreover, as energy demand exists, there is potential for growth. Therefore, as the population increases, the demand for electricity, water, and gas will grow, suggesting a high probability of proportional growth. According to UN forecasts, the US population is expected to continue to increase, which also raises expectations for VPU's performance. I would like to compare the S&P 500 with VPU. VPU is represented in blue, while the S&P 500 is in red. VPU shows a growth rate comparable to that of the S&P 500. It seems there is no problem in considering it for long-term investment. Let's take a look at the summary again. VPU is an ETF composed of 65 US utility sector stocks. 2. It has shown good performance with stable price movements and high dividends. 3. It has a track record of steady growth in the past, and further growth is expected going forward. Thank you for watching until the end. I hope this video helps you, and wish you all successful investments.